Greenwood Energy's Camilo Patrignani discusses investment opportunities in the Latin American renewables market. Next. Hello and welcome to On Point. I'm Monica Trouzzi. With me today is Camilo Patrignani, CEO of Greenwood Energy. Camilo, thank you for coming on the show.
Thank you very much for having me.
Camilo, Greenwood is heavily invested in the Latin American renewables market with a 3-gigawatt pipeline spanning the region. What's compelling from an investment standpoint about Latin America?
What's compelling about Latin America, in my opinion, is that it's a largely unsubsidized market where power prices are substantially higher than in the US in general. And you have a great solar and wind resource. So today the economics in Latin America are, as an investor of course, are much better than in the US. And at the same time, you're bringing energy security for these countries in Latin America, which is obviously very important for them, and reducing their costs. So there's everything to be compelling about, frankly.
So what's the market opportunity then for U.S. companies that could potentially be investing in Latin America?
Well, the American IPPs and also equipment manufacturers obviously had a head start. I mean, renewables started here seriously probably around 7 or 8 years ago. And in Latin America, it's just starting, you know. So in countries like Chile, there were 6 megawatts of solar capacity last year. So it's a market completely in its infancy. You know, there's been wind developments in Chile, in Brazil for maybe 5 years, but, you know, solar, for instance, is completely underdeveloped. So you have an American company that is competing very hard for business in the US. They can go to Latin America, get an early start, potentially become a first mover in that market. So for independent power producers that are competing for rate for projects in the US, for those that manufacture racking, wind turbines, solar modules, there are not that many in the US, I guess, but you know, still, engineering firms, development firms, any component of the value chain has a better opportunity, in my view, in Latin America than in the US today.
Okay, so it's a burgeoning market, but not all perfect. There are some government challenges, regulatory challenges. What are those regulatory challenges that exist?
Well, there are obviously many challenges. The regulatory challenges are, in some cases, that there is no regulation at all. You know, so. And you do need net metering regulation, for instance, if you want to develop distributed generation and provide this solar power to small industries and residents and residential the residential sector. But you have it in countries like in Chile. In Chile, they are amending their renewables law. In Colombia, they're launching their first law for renewables. In Mexico, they're going through an energy reform that is on course and will be probably done by mid next year. And they're all, pretty much all countries working very actively to get this developed as quick as possible. You also have challenges to get debt financing. So, and there comes to play in probably half of the countries, the involvement of multilaterals like IFC, IDB, Proparco, etc. Other challenges, I would say, is the interconnection systems. You find they're pretty saturated at the levels they're in today. Although the population is growing, the middle class is also growing. You know, the infrastructure needs to cope, and they don't have enough power yet. They don't have enough transmission assets and lines today. So you need all to happen in tandem for it to be productive, right? So in pretty much any country where we're working in Latin America, we have an issue with transmission lines by which the government is promising to have it installed a certain megawatt capacity by a certain date. And our projects, we know, are going to be online at least, you know, from that date onwards. So
how is your company navigating all of these challenges? Because you see that market as a successful one to be investing in. So how do you navigate all of that?
You know, it's frustrating to be on one single country and having to go through the ebbs and flows on one single country. So what we do is we diversify. And we are opportunistically investing in every single country, or willing to invest in every single country in Latin America and the Caribbean. And we have active projects in Mexico, Nicaragua, Guatemala, Honduras, Panama, Peru, Chile, Brazil, Argentina. So you get frustrated with Argentina, well, Mexico is advancing a little faster. So that's what we do, and we work hard. You know, we typically partner up with local teams that are very incentivized, and they know the ways around the public sector and the private sector, if you're looking for power and purchase agreements. And we rely heavily on them. And we support them with all the international components, you know, the financing, et cetera.
Sure. No, you mentioned Mexico. Most analysts see a huge potential there for oil and gas development resulting from the energy reforms that that country is undergoing. You think that renewables will play a big role too, though. How does Mexico's energy reform impact the renewables market in that country?
Well, Mexico is the largest market in Latin America for renewables, in my mind. You know, maybe on par with Brazil, but definitely ahead on solar. The reform is tackling oil and gas and also renewables. So they have an incentive to obviously, well, they don't have an incentive, they actually have a need to produce baseload power. They have a growth of energy demand of something like 6% a year. So they really need to get natural gas from the ground. They need to build combined cycle power plants. And they also need wind, solar, and any resource they can tap into. They are aware that they're better off exporting natural gas and oil if they can, and using their own solar resources and wind, which, by the way, they have both and in very large quantities. But many people in Latin America are looking to Mexico because, and in the US as well, because it's going to create a massive business opportunity and a very interesting an example, you know, of what can be done.
Global oil prices are low. They're expected to stay low for quite some time. How does that affect your business, and is that a negative for you?
Not at all. I mean, at this point, I'll just give you an example. In Panama, we signed a power and purchase agreement with the University of Panama for 44 megawatts of solar energy that we're going to be building in January, completing by the end of next year. It's 15 cents a kilowatt hour. Power prices in Panama can be anywhere between 20 and 40 cents. They rely on hydro and on diesel. Oil prices can simply not get cheap enough to compete with solar. It's just, they can't. I mean, solar is so far ahead in terms of cost. And don't forget that we hit an oil production high, and it's been flat for a while and growing very slowly. So all the large basins, you know, in Saudi Arabia, et cetera, they're already at the maximum production output. So maybe prices continue declining a little more, but long term, I don't see any fundamental that can really underpin a decline in pricing. Right. Particularly when I see, you know, 5 billion in middle class in 30 years from 2 billion today. All those people want to drive a car, have an air conditioning, etc. So,
very interesting perspective. We're going to end it there. Thank you for coming on the show. I appreciate your time.
Thank you, Monica.
And thanks for watching. We'll see you back here tomorrow.